Adobe is very much on my radar. We're approaching 5-year lows, and we're doing that while fundamentals of Adobe have improved. In this video, we're going to craft 3 different earnings trade ideas. But these aren't going to be random trade ideas, they're going to be based on actual earnings. We're going to use the pre-earnings analysis indicator to layer on some data and make a better educated guess around which option strategy is going to do well this earnings season. Now let's start with painting the picture of Adobe as a stock in terms of its 5-year price action, and then we can zoom into what's currently happening. If we look at just Adobe without any indicator loaded on, let me remove that, we get a cleaner view of price action and we can see that Adobe is approaching 5-year lows. The last time Adobe was near this price was near 2020, and then previously before that was in 2019. Why, you might ask, is Adobe approaching this low price? Well, a lot of competition. You have actual companies like Canvas, Figma, etc. that have come out. You have actual tools like AI, which allows you to do a lot of the image editing. And I think that is being used to discount the price point of Adobe. However, even with all of that factored in our previous video, we looked at the numbers and it seemed like Adobe still felt almost like a no-brainer, or not a no-brainer, so to speak, but the closest thing to it at these price points as we head into earnings. So let's take a look to see if that is the case, supported with actual data, with some past stats. So the first thing I'm going to do is load in our pre-earnings indicator. What this will do is give us some clues around what is the earnings personality of Adobe. Here I'm going to load in 20 years worth of data, and we can start with our labels left to right. Now, the first thing that stands out is price action inside of Adobe as we head about, 2 weeks into earnings, tends to rise more frequently than it tends to fall. 60% versus about 40% of the time for fall. If we take a look at what price is currently doing, if you told me to pick a bias one way or the other, based off of what I just shared, my bias would be more towards Adobe should rise into earnings. I think this sell-off is a little overdone, especially as you head into a period where a single positive catalyst could be all that's needed for price action to revert. So that's the first clue, is more often than not, price tends to rise as we head into earnings. The next clue that we can observe is what are the average move sizes. And you should notice that the small bucket has the greatest percentage here, and this is what we would expect. So somewhere in the realms of 3-ish percent, 3 to 8% is what covers a majority of the spectrum here. So let's say 3 to 8% is what we expect the move to be, this rise into earnings as we get within this 2-week period, which is approaching very closely here as soon as we hit this blue line. Now, the last piece of information that we can gather here is implied volatility. Now, historically, we can see that IV tends to rise more frequently as we head into earnings, about 70% of the time, versus about 30% of the time in which IV falls. Now, you can't just take this on its face value. We need to dive a little bit deeper, so I layered in the implied volatility indicator. This allows you to see the actual IV percentile. And if you dig a little bit deeper into some of our more recent earnings, so let's use this as an earnings example here, the earnings from December of 2025. What you should notice is as price action rose into earnings, implied volatility actually fell into earnings here. Take a look at what happened before that earnings period. Here, price action sold off into earnings and then chopped around, and that IV shot up at the very tail end. You can look at the IV here as well, in which again we saw IV more towards a decline as we head into earnings. So this notion that IV should rise 70% of the time, I did not necessarily buy, given how steeply we have seen this implied volatility rise before we've even entered this final 2-week period. So if you did tell me to pick and choose, I would actually go on the contrarian side here, looking for IV to fall. So the clues I have are I'm looking for IV to fall, I'm looking for price action to rise, and I know that earnings is coming up as a potential catalyst. Now, given that I'm already a happy buyer, the first thing I did, now that we have all this, I'm going to remove the pre-earnings indicator. The first thing I looked at is there a price here that I am a very happy buyer at? Given where Adobe's currently trading, I thought an entry near 200 would represent the closest thing to I am very happy buying at these prices. So 200 is the first level I want to call out. The second level was 250, which is very close to where price is currently at. So 250 stood out as a place where I expect to see some type of support, especially with what the candle looks like today and yesterday. If I zoom in, feels like we're starting to see some wicks suggesting buyers starting to step in buying these lows. So first level 200, second level 250, third level, if you had to pick one, was somewhere in the upper end of this zone, this box right here that we have, this 270 area. So I really had 200, 250, and 270. Using that, I constructed three different trades here, which I'll show you in the Analyze tab. The first is very simply selling that $200 put. Now, this $200 put is that price that we're happy to buy at. Currently, you would collect about $100 worth of premium for selling the March monthlies. And the March monthlies, if you take a look, have both earnings included within this actual cycle along with elevated IV. So that's one potential trade idea. However, that requires a lot of capital, given that you would need to set aside almost $20,000 for this one put, assuming no margin is used. And that's only to collect about $100. Doesn't make a lot of sense, but does feel like a price at which it would be a no-brainer. If you bought a put to cover this, I think your risk to reward makes very little sense. So there I started to craft two other put credit spread ideas. I'll start first with the 250-240. Currently, this is a $10 wide spread, and you can collect only about $3.42. I would want to collect at least $5 on this, ideally something closer to $6 for this spread to actually make sense for me. The next spread idea that I thought looked interesting was the 270-250, which was closer to that 1-to-1, but still you were off on the price by a little bit, where we needed this to be a little bit greater than a $10 credit to collect at least 50%. Both of these strategies, actually all three of these strategies, but the two spreads which allow you to cap your risk, were ways to participate in the upside price action in Adobe while trying to not be long implied volatility, instead be a seller of actual premium and capitalize on what are some liquid strikes. If you take a look at the option chain here inside of March, it's really the put side that stands out in Adobe, and in the put side, there's a few strikes here that have more than 1,000 in open interest. And if you take a look at the ones we discussed, we have 270, 250, and then we also have the 200 price point, which you can't currently see, but allows you to collect just some easy premium. So three different trade ideas in Adobe, all centered around this earnings optimism that I'm looking for. I also think Adobe, with just a little bit of positive news, any kind of positive catalyst, could be the type of stock that has a really nice gap up, something similar to this Robert Half type of approach. A stock which had seen really deep sell side activity, a little bit of choppiness headed into earnings, and then a gap up. So something similar is what I'm looking for here. Hope this video was helpful. Take care, everyone. Good luck trading for those of you looking for some plays in a stock that I think, quite frankly, is oversold. We'll see you in our next update.